everybody should own real estate. That's my core belief. I think everybody should. Doesn't mean everybody should be full-time real estate investors. That's sure as heck not for everybody. But at the same time, real estate or a business shouldn't control your life and cause you to miss your kids' birthday parties. So how do we build a life of freedom based on box on dirt, and I make that thing pay me? How do I do more of that?
Hi, I'm Tim Bratz, and every week I sit down with the top influential entrepreneurs in the country to discuss how to leave a true legacy in all things happiness, health, wealth, and wisdom. This is the Legacy Podcast. Hey guys, welcome to the Legacy Podcast. I am your host, Tim Bratz. Today I am here with my buddy Andrew Schlag, who owns Truca Investments. They are out of the Midwest, specifically Kentucky area, and in all the neighboring cities there. They focus heavily on creative financing on the acquisition side and then selling through lease options. And so he's got an awesome coaching platform that they've educated a lot of amazing investors on how to do this strategy. We're talking offline a little bit, Andrew, and he's saying how they haven't been adversely affected by interest rates because of the way that they structure their deals. And so we're going to dive into all that stuff, exactly how they're finding deals, how they're structuring and capitalizing these deals, and then what it looks like in order to reposition, exit, and what that looks like from a full exit or a lease option exit, and all the different other amazing stuff that we're going to be diving into. So, Andrew, appreciate you being here, buddy.
Thanks for having me, Tim. Good to be with you.
Yeah, man. Absolutely. So let's start out with this. You guys, you've been investing, I think you said since 2014. So you've been 11 years into this, seeing some cycles. Was able to rise or ride the wave up into the early 2020s, and then seeing what's happened with interest rates and insurance costs and all that kind of stuff. But you've been kind of insulated, right? You're in the Midwest, so your insurance hasn't been hammered the same way that the Southeast and Texas and the coastlines have been. You do a lot of seller financing, so you haven't been adversely affected by interest rates. And because of some of the markets that you're in, supply chain's not derailed, right? Your labor expense hasn't grown dramatically. Like, you've done a lot of cool things, whether intentionally or unintentionally. Like, being in some of these markets are very, very strong. And I think that's a really cool way to look at some things on how to select markets, what are you looking for in different markets? And I want to dive into all that stuff and how you guys structure your deals and how you help people, right? Educate people on how to do all that stuff. Before we dive into that, I want to hear your backstory. How did you get into investing in 2014, and how has that grown? What's your backstory in order to get there, and what have you seen over the past 11 years being in the business?
Yeah, man. Well, thank you for that question. So I was 21 when I started, and I just got out of the hospital. I was $80,000 in medical debt. I grew up doing construction, and I am 21, and I'm going like, I thought like I was supposed to do so much good in the world, and here I am broke and health challenges, and I was very overwhelmed. And I'm a preacher's kid. I grew up in a town of 400 people, Belle Rive, Illinois. You may know where that is. And having grown up there, I just didn't know what I didn't know. And so I'd been like Googling how to buy a rental house, and I'm like, I make less than 30 grand a year. It's going to take me a lot of years to save up to buy a rental house, the Dave Ramsey method. So I'm trying to figure this out, and I hear a radio ad says you can buy real estate, and I start learning about wholesaling. And so I wholesaled a deal. I made 3 grand, and again, just didn't know what I didn't know. And fast forward, I ended up moving to Evansville, Indiana, and I started buying houses like crazy. And that was 2014. I bought 12 houses. I started in April of 2014. I bought 12 houses that year. And then the following year, I bought 50 single family houses.
All on seller finance.
Almost all on seller finance. I was doing a few wholesales, a couple fix and flips in there.
I mean, we're working with all the tools in the tool belt, but majority
exactly
was the model, right?
80-90% was bound on a finance, selling lease option. And so fast forward, it decided I wanted to grow, right? Scaling up is the thing. And by the way, I love what you do with the multifamily. I often talk to people and say, hey, that's the next step. Like we gotta scale up. We got to build out. Well, I did it the wrong way. So I went and I bought a 66 unit mobile home park, and I started self-managing that. And I bought a 12 unit property, drug house. I didn't know it was a drug house at the time. I self-managed that. And then I started converting my lease options to rentals because I was a glutton for punishment. And I ended up, having over, gosh, probably 100 plus tenants I was managing myself. And so I would drive around in my F-150 and collect rents, and went through that cycle of day and night grinding it out, and being equity rich and cash poor, doing it all the wrong way. And it
Dude,
finally
this
in
is every investor. This is all of us, man. We've all been down this road, right? You haven't paid your dues until you've been, showing up at houses and trying to collect rents from apartments, and you got cash coming in, and you're worried about getting mugged, and you getting chased out with baseball bats, and you got fleas on your jeans when you walk out of one of these places. Like that's part of paying our dues. I feel like.
yeah. And it's makes you grateful on the other side, that's for
For
sure.
sure, for sure,
And
right? Like you got something to compare it to.
for sure. And I think the biggest thing for me, Tim, when I finally, for lack of a better term, woke up in 2019, late 2019, I thought, we expect those miracle moments sometime. Being a preacher's kid, I'm like, this is my answer to prayer. And I got an offer on 39 of my properties. And I'm like, for the first time, I'm going to have net seven figures in the bank. Like this is my ticket out. I'm winning. And long story short, that went sideways. It wasn't, I didn't get my attorney's final approval on the documents. I lost over $3 million. And
Mm.
I'm going, wait, I've been working all this time for what? Right. And so it was during that season
So did you
where
exit, and how did you lose $3 million?
I lost $3 million from going through to sell 39 of my properties. And I signed the agreements. The earnest money came in, and there was long delays, a very long backstory of what's going on. But my attorney's reviewing the documents. He says, like, hey, I'm still a week out on approving these. And the quote buyer is saying, hey, you got to sign all these documents or our appraisals expire. So we was in a back and forth. So I on a weekend, signed documents without my attorney's approval, and the wire never showed up. It was supposed to be a seller finance sale for $1,050,000 down, and the $1,050,000 never showed up. And the deeds are no longer with me. It was a
Oh
nightmare. It took me
no, man.
years to climb out of that. And what I will say, brief story, but what I will say, keeping as brief as possible, through that time, sitting at the bankruptcy attorney's office, looking at my options, thank God, came out of that unscathed, I guess you would say, was able to work essentially day and night for the next year and a half, wholesaling, to climb my way out of that and start building again. And it was during that season that so many opportunities began to open up. And I say it rapidly here, just so you guys know, listening to this, like that season was a couple of years long
Yeah.
of an
And it feels
absolute,
longer when you're in it.
it felt like decades, man. So on the other side, I will say, being able to now build community and connect with great people, that's what it's about for me. Is okay, how do I serve more, how do I give back more, and doing more deals is the symptom of the habits we build rather than chasing the next deal.
I like that, man. I like that. I've learned, I mean, you go through, right? I got involved in real estate in '05, started investing in 2009, bought my first apartment in 2012. And like guess what? I was there when the market collapsed, but I wasn't at risk, right? The way that a lot of other investors were. And I didn't start
Yeah.
buying until the year after really the collapse. And everything that I bought for the next, I mean, over a decade, right, was all at pennies on the dollar and just going in the right direction. And it's like, let's just do more. Let's just do more. You can't lose when you're buying buildings at $20,000 a door that rent out for $800 a month, right?
Right.
And it's like, oh well, let's do it again and again and again and again, and then all of a sudden you're starting to buy it for $80,000 a door that rents out for $800 a month, and then starts like things start getting more pricey, and it's $100,000 a door, and it's only like $800 a month, and it's like, well, I got to keep on doing deals, I got to keep on growing, I got to keep on like, and you start chasing this ego play, and you start chasing what we think uh, society expects, which is just more. And more is not
Mm.
always better, right? Like more net is better than more gross, right? And sometimes free and clear is better than a bunch of debt. And like there's ways to grow outside of just adding door count or adding additional stress, right? Like I'd rather grow my revenue by focusing on how do I drive more revenue up and reduce expenses on an existing building than buying something new. If I buy something new, I got to sign on more debt. I have to raise more private money. I have more liability. I have more headaches. I have more tenants. I have more potential of lawsuit. I have additional utilities that need to be paid and accounting and bookkeeping and tax returns and all these other things that you don't really think about as you add door count that become a time suck and something that's taking you away. It's draining you away from where your time could better be spent. And
Yeah.
I think that's one of those things that none of us talk about. Nobody really talks about it on the rise up until you're like, hey, not as cool, right? To own 5,000 doors as it is to say you own 5,000 doors. Sometimes you got to go through this process and realize it for yourself. And then I try to like go back now and educate people so that way they don't make the same mistakes that I made. But
Yeah.
dude, you get it, right? You know what that's like.
And I think that you hit the nail on the head there, Tim. It is about, okay, how do I live the life I desire, the life for me I'm called to, right? How do we give back? You have a big heart for others. I've known that from uh, distantly knowing you for quite some time now, and you love to give back. I love to give back, and now it's more about saying, okay, how do I live my life of freedom? How do I give back? How do I travel? How do I make sure my life's good? Because think you're in the same boat. We're past the ego play of wanting to own so many thousands of doors
Mm-hmm.
for ego's sake. It's going, where do I get my net and how do I live the life I'm meant to live and help others step into that same freedom?
Yeah, dude, 100%, man. And I think it's heard a funny quote by Jimmy Carr, the comedian,
Yeah.
who's a really brilliant guy. He's really funny, but he's also like brilliantly philosophical too, and has a
Mm,
lot of really good perspective on things. And he said something along the lines of like in your 20s, right? You're worried about what other people are thinking about you, right? In your 30s, you're like, I don't care what other people think about me anymore. In your 40s, you realize nobody's ever thinking about you anyways, right? They were only thinking about themselves. I mean, yet we're driven during
yeah.
these earlier years of our career, of our adult life, thinking like, I got to do this for, because people are watching, people are looking at people, everybody's just focused on their own stuff, right? Like,
Yeah.
don't worry and don't drive your business because you're trying to keep up with the Joneses, you're trying to keep up with the other, person in the mastermind, somebody else on social media is talking about a win. There's a lot of like just toxicity out there of like I see somebody who bought a duplex and I get anxious about it. Like, oh, I need to be doing more. No, you don't. You need to be slowing down, spending time with the kids, spending time with the wife, hanging out, making an impact in other ways and helping other people. Because like, uh, dude, as I grew my unit count, my liabilities grew, balance
Yeah.
sheet grew a little bit, but my time freedom was reduced, my happiness
Mm,
was reduced. The I couldn't afford anything more than I could have afforded earlier, right? Like what
yeah.
can you buy with 3,000 doors that you couldn't buy with 1,000 doors, right? Like and I think you got to, again, it's one of those things. Sometimes you got to just kind of get there, but hopefully people who are listening can understand that's not what, like, design your life and then build the business around it. Like, realize what do you need in order to then sustain your lifestyle to go and do what you want to do, right? Andrew, you want to go and travel, you want to go and hang out, you want to go and make an impact in different communities. And maybe there's some build houses in Haiti and like do some really, really cool stuff to help
Yeah.
less fortunate people. Like you don't need $10 million portfolios or $100 million portfolios in order to be able to do that. You can make a serious impact and live the exact lifestyle that you want with very low stress, very low headache. And not taken away from anybody who wants to go and light the world on fire. Just dude, identify that and be aware of it and make sure you're doing it for a reason that you want to do it instead of society, right? Telling you that you should just grow, grow, grow.
I think you said something there that was deep and powerful, Tim. You mentioned that, here you are, somebody who owns many thousands of doors and you said, I see somebody buy a duplex and I'm like, I should be doing more. And I think that that is a perfect example. You know, many people when they start, it's like if I could just get to 5,000 a month, if I can just get to 10,000 a month, if I can just get to 100,000 a month, and we move the goal. Now, on one side of that, somebody said, "When's enough enough?" And I said, "It's never enough because it's not about me, right? I want to give back more." So there is the side of I love for people that have ambition. But there is also the side of realizing if you're pursuing a certain number to satisfy the fact that you're where you thought you should be, you'll never hit that number because the number keeps rising. And I think you perfectly described it as saying design your life and then how do I make the business serve that life? So now if I'm chasing more in 2026, it's about giving back more and I know why I'm doing it. I'm not chasing it to somehow feel magically fulfilled because suddenly I'm at 2,000 doors or 5,000 doors or 10,000 doors because you'll be
Mm-hmm.
the same Tim Bratz or Andrew Schlag or whoever you are listening to this as you were last year, just more money and more problems or more stress or more debt or whatever the case is. And so it's
Yep.
saying, why am I doing this? And let me make sure I design this business to make that happen. Man, when you can design your life and business by design, I wish I would have knew this like 7 years sooner than I
Oh,
found it out. If if you can design your life and business literally by design, is the actions I'm taking today getting me to not just more numbers, not just more doors, not just more money, but is it actually getting me a step closer to what I am wanting to accomplish? To the 14,000 kids against hunger that we packaged the meals for and donated for, to hosting the charity, the Kids Against Cancer charity event that we hosted with $55,000. Like that is what I want more of.
yep. Yep. Um, I mean, the talk at the mastermind, right,
Yeah.
with Tim Tebow, and he's like, man,
Mm,
what a
it was good.
disappointment if I passed away and I was only known for football, right? Like the true legacy, the real reason I'm here is to make these impacts on these kids in less fortunate countries and uh, people who don't have meals, let alone inspiring somebody for throwing a football. Like that really
Yeah.
resonated with me. Of yeah, man, like what are we doing, right? We're just and it's a double-edged sword because we're in the United States, right?
Yeah.
Opportunity is infinite, right? It's limitless,
Everywhere.
it's unbounded, and you almost feel like I owe it to society to grow this thing as big as I can. I owe it
Yeah.
to, right? Let me see what kind of limits I can push in order to be able to do this. And I think, to your point, there's some level of that to keep on going. There's never a finish line. Maybe there's checkpoints along the way to achieve certain goals. Um, but not getting lost in like just growth for growth, right? Growing
Yeah.
because now you can build churches, now you can build hospitals, now you can get fresh water to communities that don't have it. Now you can build homes and schools in places that don't have that kind of thing, and that's why you grow bigger, right? And that helps you then push through a lot of the adversities and stuff and headwinds that we would face in business, and might make it worthwhile. But there's a lot of really cool impact you can make without taking on that additional responsibility um, and stuff. So I just, I think it's important to address that and make sure people are aware of why are they building what they're building. So um, good tangent, but let's get back into the tactical, technical side
Yeah.
of what you guys are doing. All right, so now you went through some adversities in early 2020 or 2019, 2020 range, got back, really understood, you did the work, right? I think that's a big lesson to be learned too, is when your back's against the wall, and there's been a lot of people with their back against the wall, at least in the commercial real estate, people that I've seen and talked to, and over the past few years, I've been like, how do I get out of this situation? What I have found is you get out of the situation by obsessing. One, quantify, like, or one is identifying the revenue generating activities and then
Yeah.
obsessing and taking not just action, but massive action on the revenue generating activities. Dude, you got to clear out the noise. You got to eliminate anything that's a distraction from driving more revenue. If you have money problems, you know what solves money problems? Revenue, right? Revenue solves all problems when it comes to business. Um, so if you can go drive more revenue and really at the end of the day, man, what I have found is that there's only a handful of real revenue generating activities. And those revenue generating activities are pretty much prospecting, right? It's prospecting for deals, it's prospecting for money, it's prospecting for team members, right? To help grow things and take things off of your plate so you can go prospect more for more money and more deals. And that's what you did. You just obsessed over these handful of different things that you could do in order to generate more revenue. And guess what, man? If your back wasn't against the wall, if you didn't lose $3 million, you probably wouldn't have obsessed over the revenue generating activities and gotten the clarity that you got over that next 2 years from doing that. So now it empowers you and it improves you and strengthens you to be able to go and do that. Obviously, we don't want to go through that and we don't want constraints like that put on us, but dude, you built that muscle, right? And it gives you a level of confidence that you can go do it again if you ever had to.
And I think that's the piece to take away. It is that fact that when you go from thinking you're going to be net 7 figures liquid for the first time to then going, wait a second, I just lost 3 million of equity properties, cash I was supposed to have now. And you go, wait a second, something's off. And then you're sitting, for me, when I'm sitting in the bankruptcy attorney's office, exploring my options, every negative voice of everybody who didn't believe in me is coming there. It's like, you're right. You failed. You screwed up. This business ain't for you. Like all of the crap. And when I left there, and thank God I never filed bankruptcy. When I left there was something in my mind, even though I felt like a failure and I felt like I was over the entire business, I was doing the math and I said, I need just over $100,000 a month to pay the attorney's fees, to handle all this mess. I said, 100,000 divided by 30 days, that's $3,300 a day. And so every morning I would get up and go, where can I find $3,300 today? What deal can I put together? What wholesale deal can I do? Who can I call? Where can I get a lease option, sell a lease option, buy a house? And so every day was just pursuing that next step for that season. And I think
there's no other noise, right? You eliminated all the other stuff, right? The only thing, and you're not looking at $300 activities. You're not looking at $1,000 activities. You're not looking at $2,000. Dude, if it doesn't meet this minimum threshold, I'm not even looking at it. It's like getting a red car. You drive your red car down the road, you see a bunch of red cars now. It's like, that is, dude, setting the bar and saying, I'm not looking at anything else, creates a level of clarity and creates new opportunities that only $3,500 options pop up on a daily basis now.
Well, and something that you probably know this better than most, Tim, is the fact that it takes the same amount of time to close a duplex as it does a single family. Well, then multiply it times 10. I mean, you're getting into hundreds of units. The process is a little bit different, of course, but it's the same principle. You're still either getting a loan or negotiating the deal. You're still taking ownership of the property, and you go, okay, how can I take the efforts I'm doing and remove most of just the crap in my life? Because most of us, and that's what I found I was doing back when I lived in Evansville, Indiana, I would drive around and look at my properties. Well, for what purpose? I don't know, because it's Thursday night and I want to feel like I'm busy, right? And so if we can consistently be growing, consistently be building, consistently actually doing action that matters instead of busy work, everything changes and we can do a lot more than we think we can in a lot less time than we think we can.
This episode of the Legacy Podcast is brought to you by Legacy Family Mastermind. I know what you're going through. I know you feel stuck in small deals, trying to figure out how do you get to that next level. I know it's hard to raise private money for real estate deals the way that the economy's been over the past few years. There are probably properties in your portfolio right now that are either losing money or at best break even, and you're trying to figure out how to turn them into winners. Or you're thinking to yourself, dude, I just want to be able to go on vacation without my business all being on my shoulders. Not having the time freedom or the financial freedom that you thought real estate was going to give you, I see it over and over and over again. But I've got the solution to every single one of those. Legacy Family Mastermind. This is a group of high-level commercial real estate investors that can help you break through every single one of those bottlenecks and help you get to that next level. I mean, you know the saying that when the student is ready, the teacher appears. Here we are. If you are serious about scaling your rental portfolio, we are here for you. This is the group to do it with. We would love to help you on that journey and design the exact life that you want to design so that way you can live it to the fullest. The next step is simple. Just schedule a call with my team at the link below and we'll see if it's a fit, because I want to see you sitting at the table with our legacy family. Let's go build some wealth together. I love that, man. I love it. Yeah, I mean, when you really catalog your time, you sit there and you're like, hey, let me catalog every 15 minutes of a normal work week. And then you go back and see and quantify, right? Did this make me money or not? Did it make me, is it a $10 an hour activity and a $100 an hour activity or $1,000 or a $10,000 an hour activity? And you start quantifying how many real activities are you making that are, how many are you doing and how much time are you spending doing $1,000 activities and more? It's like, dude, it's probably less than an hour or two per day until you have that clarity. And then you can remove everything else. You can staff it all out. You can delete it from your schedule and you focus on just the big dollar activity pieces. And guess what? You start making more money. How is this possible? Well, because you don't allow yourself to be inundated with these low level, small dollar amount type things. And it's, dude, a lot of it just comes down to clarity, right? And we're running around aimlessly with our heads cut off until you listen to a podcast like this, until you plug into a mastermind, until you get a coach who smacks you in the head and it's like, dude, what are you doing? Like, let's focus on what actually matters here, which is these activities in business. So, no, man, that's awesome. So tell me about how did it keep going?
So the biggest thing was, coming out of that season and figuring out there was a thing that occurred to me, and it finally one of my mentors actually told me one day. He said, just handle one fire at a time. So I just started taking bite-sized chunks, saying, how do I do this? My average profit per single family deal is $52,000. Then we had the various other projects we're doing. We kind of, we do the mobile home parks and the developments and the land deals and all the other moving pieces, the small multifamily, et cetera. And so I'm just looking at this going, okay, what can I take off my plate? What is the thing that's only going to make me, and this, if you guys are already doing substantial revenues, this will make sense. If you're just starting out, then understand what I mean. Just remove a zero. But in that season, I was going, what is only going to make me a few $100,000, but suck up a crap ton of my time this year? Because I can't just do a few $100,000. I got to hit seven figures to survive. Mm-hmm. And so I started to remove the bad, I guess you would say, the bad millionaire habits and start to upscale, saying, what's the habits that I can do to actually not only survive, but actually start thriving again. And so every day it was get up, say a prayer. It was during that season I developed the habit of starting my day, not chugging a bottle of water, and in the simplest fashion. And the first words out of my mouth, because the first thought in my brain was usually, oh crap, the sun's up and I got to get to work. Yep. So the first words out of my mouth would be physically, and you choose whatever words you guys want, but would be thank you, God. Because I'm like, Andrew, today we're going to be thankful. You're alive. You have health. Everything may suck, but today the sun's shining and you're alive and have health. And so I would start my day. Sometimes that was the only time me and God may talk for the day, but I would say, thank you, God, because it set my day on a different priority, a different perspective before I dove into all the phone calls and all the crap that I was dealing with. And I started putting out one fire at a time.
Bro, there's so much wisdom in that, because it's like, dude, what your biggest problem is making $100 grand this month. That's your biggest problem, right? Like that's our biggest problem. Our biggest problem is I need to make $1 million this year. What? Right? There's real problems out there. Like, think about all the things we have to be thankful for. Like, we can go over to the wall and press a button and control the climate inside of a building or our house. Dude, that is beyond what kings and queens wished that they could have less than 100 years ago, right? Like,
so true, man.
Like indoor plumbing, right? You press a button and all the filth goes away, and where does it go? I don't know. I don't see it again though, right? Like, think about all the things that we have and all the luxuries we have to be thankful for, and we're complaining about how do I make an extra 100 grand? Like, dude, and I've been there. I've been in the exact same position of, hey, I need to rate, like a private money lender of mine bailed on a Friday on a big apartment portfolio that was like 4 million bucks he was supposed to be bringing, bailed on Friday, and I had to find the money by Monday for closing. And I had to raise $4 million in 48 hours. Never done it before. It was in 2018. And I remember feeling bad for myself. Like, oh my God. And
Yeah.
I'm like, dude, my kids are healthy, right? My wife's happy. It's a beautiful sunny day in the Midwest. I was in Ohio at the time. The dog's running around the backyard, right? We got a warm coffee in my hand. Like, and I'm like, what am I complaining about? I have like, I
Yeah.
should be, and it takes you from feeling bad and feeling like a victim to this empowerment, doesn't it? Like it takes you, when you start your day with gratitude, or start any, or repivot your mindset in any
Yeah.
distress situation to a place of gratitude. It's empowering. It builds confidence. It builds, like you could run through a brick wall, all because you're like, yeah, what, dude, what am I worried about? Like, let's go and attack this problem. And then you show up with different energy, and then you show up and you're answering calls, and you're showing up with sellers and negotiating. But like, it's just, dude, the gratitude is the secret. It is the secret to life, man. And we have so much to be thankful for. And we just need that to be present at all times, man. That's a big
So true.
differentiator, and it's what got you out of your situation. It's powerful.
Well, and you know, rewinding back to before 2014 when I was in the hospital, anytime I think back to that time, I look back and it's like what I prayed for at that time was because the doctors didn't expect me to come out. And what I am praying for in that time, my whole prayer is God, get me out of here alive. Like that's what I want. And
One
so
thing that
every
mattered. Yeah.
that's the only thing. And so you look at that and everything else, you know, I started saying something in recent years. I say, anytime I have a stressful day, I say, these are the problems I used to pray for. And regardless of whether you're trying to get your first deal ever, or regardless of whether you're trying to get your next 10,000 units, you are now dealing with problems you used to pray for. I assure you that.
Mm-hmm.
And if you just
Mm-hmm.
look and you go, oh my goodness, I'm healthy. I've got water. I've got food. Thank you, God. Like that changed everything.
Yeah, man.
And it's in reflection and retrospect, it's easy to do that. But in the moment, it's the toughest thing on your plate.
It is, right? It's really, really hard, but it's just like, sit back, go get a glass of water from the fridge that's filtered,
Yeah.
that's 30 feet away, as opposed to 3 miles away that you have to go and
Mm,
walk to. It's I think about this stuff, man, all the time, but uh, and it humbles you in a big way. And I
yeah.
I hope I can instill that in my kids and show them this kind of stuff, and show them what life could be like, right? If they weren't
Mm,
born in the United States, if they didn't have all these luxuries, and things could be a lot more difficult, and making sure that they can show appreciation for what they do have. So,
yeah.
no, man, that's amazing. So but you turned it around, right? You showed
Yeah.
up every single day, opened it up with gratitude, you know, uh, uh, did the activities that moved the needle forward, and kept your head down, right? And were able to get yourself out of that situation. So what was the next chapter after you were able to then reposition over that 18, 24 months, make enough money, position yourself now to get into some of these bigger deals and alternative deals? And what was some of um, the aha moments on that part?
Mm. I think the biggest thing, and I want to add one more note to that actually, something my brother does all the time. Uh, I often say, give what you most need. And so sometimes we think like giving means we got to go get a big check and go to something big and donate a bunch of money. Go to Starbucks. I challenge you, if you're listening to this podcast, go to the coffee shop today, whenever you're listening to this, whip into Starbucks or some coffee shop and buy a $25 or $50 gift card and watch the people behind you. My brother taught me this. Watch the people behind you. Just tell the person behind the counter, say, I want to pay for the people behind me with this gift card. And then go sit there and drink a cup of coffee and watch them. Say, I get to bring all that joy to the world for 25 bucks. It will
Mm-hmm.
change your day. But what changed,
Love that.
Tim, for me after that was I think it was renewed intention. And so coming out of that, once things start to get back on track, I realized that I don't just need to go get another deal. I don't just need another wholesale deal, another check, another $52,000 payday from another lease option. I need to really become intentional. I don't know how many years I get on this earth, but I want to use them wisely. And so that's when we started moving into more intentional projects. Yes, we still buy single family houses. I call it eating chickens while hunting elephants. But yes, we started doing the 280 unit development project. We started looking for bigger projects. We started doing bigger things. We started a mastermind where we started, like you, bringing people together with legacy for the multifamily world. We started bringing together people active in the single family world and helping them really scale up their business with purpose. And so that was the next layer for me. And I tell you, I was hosting an event recently and somebody come to me after I told the long, in-depth version of all the crap that happened during that season. And they said to me, could you be doing what you're doing as the co-founder of Truca alongside your brother? Could you be doing everything you're doing if you hadn't have gone through that? Like, that's a very interesting question. Well, I can't say what I could or couldn't be doing. I assure you that I wouldn't be able to speak to the challenges I now speak to because we're sitting in Barcelona on a trip. And when we went to launch the education portion, and Leo is asking me, he's going, dude, like, what do you wish you would have had when you're in this season in your life? And I start telling him, and we start describing. And I had pastor mentors for God, but I felt, and I'll just tell you how I felt in that moment. I felt that they didn't get the business side. I had business mentors, but it felt they didn't get my desire to give back. And I had all of these segments covered, but I didn't feel like we had uh, uh, everything that I wish I would have had during that season. And thank God for the people who stood with me. You'll find out who your true friends are. But I said, described everything I wish I would have had. And he looks at me, he goes, let's create that. And so the next season was really is now really trying to live out the Zig Ziglar quote. If I help enough other people get what they want, I don't have to worry about what I want. And so,
Mhm.
yes, we're doing single family deals. Yes, we're doing multis. Yes, we're doing developments. Yes, we're doing various projects. But 80% of my effort is now hanging out on podcasts, on Zooms, live events, connecting, hosting, and empowering others to continue living and building what we are building. And I believe, everybody should own real estate. That's my core belief. I think everybody should. Doesn't mean everybody should be full-time real estate investors. That's sure as heck not for everybody, but everybody
Mhm.
should own real estate, especially during this season. We're in exciting times. Um, but at the same time, real estate or a business shouldn't control your life and cause you to miss your kids' birthday parties or cause you to miss the 3 week trip to Italy or cause you to miss these things. So, how do we build a life of freedom based on, I call them boxes on dirt, apartments, multifamily, single family, doesn't matter, houses. It's box on dirt, and I make that thing pay me. How do I do more of
Mhm.
that?
I love it, man. I love it. What you had alluded to, the market and how you're helping other people. Like, what are you seeing specifically happening in the market today? And you had alluded to, you think things are about to get really exciting. Tell me
Yeah.
more about your thought process behind that.
So I have a belief. I'm going to quote a few stats. They're a few weeks old, so if they're changed a little. But right now, in the single family world, there is about 5.5 million buyers that can re-enter the marketplace if rates get below 5% interest. Now, if you look at a chart of 08, 09, what happened? Right, 2020, when people were talking about waiting for the market to crash so they could finally buy their house. We know what happened the last 5 years, and I believe we're at that point again. My personal belief is just 2025 may have been our low point again. Um, Whether I'm right or wrong doesn't matter because 60% of houses have debt, 40% are free or clear. Of the 60% of houses that have debt, 73.3% of them have debts that are below 5%, meaning starts with a four or less. 25% of houses with debt have sub 3% interest rates on them still. Those
Oh,
are
wow.
debts we can go out and take over. That's millions of houses, about 140 million houses in this country. So if the 5.5 million people re-enter the marketplace, right now there's about 825, 850,000 houses for sale. Now, Google will tell you 1 point something million, except that includes contingencies and pendings. If you remove those, what do you think happens when 5.5 million people enter the marketplace where there's 850,000 houses for sale?
Mm-hmm.
I'm wrong and they don't continue to go down. You'll be very glad that we gathered deeds with low and no interest, principal only payments or low interest takeovers that we're selling on lease option, making good money with bad numbers. And we'll be very glad if I'm right and rates go down and more buyers enter the marketplace and prices go up again, which I am fairly, I have a strong belief that that's going to happen. We'll be very glad we gathered deeds. So I think we're in a very unique time. On a more sad side of the business, I think that probably sooner than we think, but on under a decade, and I don't know your perspective on this, Tim, that if people are not already investing in real estate, it's going to become much harder to enter that. You look at housing affordability over the last few years, I think that it's going to get harder and harder for a new investor to enter the marketplace and start real estate investing. But I think in these next few years, next several months, we could gather deeds. We are gathering deeds. There's opportunities for everybody listening to this to gather deeds and have a baseline of assets, even if you're brand new. And if you are not brand new, to lean in and to gather a lot more deeds, single family, multifamily, whatever it is in this season, and prepare for the next increase. And
Mm-hmm.
again, if I'm wrong, we'll keep making good money. If I'm right, we'll make much better money.
I tend to agree, man. I think there's a dramatic undersupply and over demand. And simple economics 101 says that when supply is down and demand is up, prices go up, right? And that wasn't the case in 2008. It's a very different setting, right? Real estate
Massively.
was the problem back then, and these unqualified mortgages and that were being given out to anybody with stated income and no credit checks and like yeah, that's going to create problems. That's not what's happening right now. Right now, it's been, we've had a lot of supply hitting the market in 23, 24, and 25. But guess what? Builders have been pencils down since interest rates went up, since builders rely on the short-term debt in order to get construction loans. They didn't know what was going to happen, so they haven't been making land. They haven't been getting new projects approved or anything along those lines. And so the product and deliveries that were started in 2021 and 22 have been delivered over the past 3 years, but those are stopping this year, right? And next year, it's less than 10% of the deliveries that we saw this year are going to be actually delivered. And even if somebody starts buying today and building today, it's going to take them 36 months to start delivering product again. And so for the next few years, I think there's going to be a lot of demand, not enough supply, which is going to drive prices up. The other thing that I would mention is, dude, you can't build a single family house for under $300,000 unless it's like a micro tiny home, right? You can't build a multifamily property for really under probably 200 grand when you start bringing in the land costs, carrying costs, and construction costs. So like, I think there's going to be this big movement towards a little bit older of a vintage of properties. Those can be purchased for $100 a square foot, right? $150 a square foot. And they're usually in better parts of the town too, right? Like they're down in like the more urban type areas and in the mix a little bit, walkable to a lot of things. And I think there's going to be a resurgence of people buying those homes, fixing up those homes, and buying those apartment buildings, fixing up those apartment buildings, and then moving in there because that's what economically people are going to be driven to. And so I do think if you own some apartment buildings that you can buy for $50,000, $60,000, $70,000 a door, I think you're going to be in a good spot over the next few years. I think if you can buy homes for $200,000, $150,000, $100,000 a piece, especially in the Midwest, those are still available.
A lot of them.
I think you're going to be okay, right? And so I do believe the second part of this decade is going to be very good for rental real estate. And to your point, I don't know what it looks like beyond that, right? I think there is going to be there's going to be a lot of pricing out, and I think the one thing to interest rates going down means that unemployment's going up, and inflation would be pretty flat. I don't know I do think unemployment's going to go up dramatically, so I do think rates are going to come down. I think they're still battling inflation, but that data can be kind of manipulated, and so they might
Yeah.
just kind of scoot that off to the side and not really pay attention to it. But it'll be fascinating, man. Like, they shouldn't have printed $10 trillion is what it comes down to. They shouldn't have printed $10 trillion in the course of 18 months and screwed up pricing across the board for everything. Like, sometimes you just need to let markets reset. But I think it's been proven that no politician is going to let it happen on their watch, and they're going to keep on printing more money and kicking this can down the road. And so what does that look like in 20, 30, 40, 50 years? I don't know, but I do think housing is a good place to be. If you can own affordable housing at a pretty low basis, I think you're in a pretty good spot from a investment standpoint in the long term. So what do you see? You do a lot of stuff in the Midwest, and we were talking a lot offline about the Midwest. I'm from Ohio. You're in Kentucky. You do stuff in Ohio and Indiana and Illinois and Kentucky and a little bit in Tennessee and stuff. Tell me a little bit about what you're seeing in these markets.
So for me, I like to stay in markets that are outskirts of metros. So like I don't buy a lot in Louisville. I like to
Mm-hmm.
stay on the outskirts, the new
Are you
New
in like
Albany,
first
the
ring suburbs,
Jefferson.
second ring suburbs, more rural?
First ring mainly, or the smaller areas like Evansville, Indiana, those 50 to 200,000 population cities.
Mm-hmm.
And that's because we buy a lot of houses on owner financing there, and there's lots of lease option buyers. We like to get a sizable non-refundable deposit the day they move in, and sometimes in the more rural areas or outskirts, smaller towns, it's tougher to find a larger non-refundable deposit, but you still find very stable, great people. And so that's what we're seeing. We're still picking up houses. Our cash deals that we're picking up way below value, we're still picking those up commonly at 50 cents on the dollar. And the owner finance, creative finance stuff that we're doing tons of, we're often getting a little bit of equity, but more importantly, incredible terms.
Yep. I love I really like the Midwest markets, right? Like,
Yes.
I'm very familiar with it. I know people, they gravitate towards the Texas and the Arizonas and the Carolinas and the Floridas. But the reality is, because of the appreciation, right, is why they're going to a lot of those. And yes, you get
Yeah.
natural appreciation, but in my mind, and listen, I live in Charleston, South Carolina. I see this stuff every single day. It's
Yeah.
kind of just fugazi, right? Is it even, it's like fairy dust. It's like not real appreciation, because it can come right back down immediately. But if you're buying and forcing and creating appreciation, you can still get appreciation. It's more controlled in the
Yeah.
Midwest, because you're able to buy at a certain price point. You're able to push the value up based on improvements that you make, and push the value up based on rents that can be coming in, and putting a buyer in place. And because you're controlling the terms, you control the price point, and you control the amount of appreciation that can happen. And that, to me, is real investing, being able to control and mitigate risk in that regard, and not being reliant upon the market dictating the value of a property, and you saying, no, I can dictate it, whether the market's up, down, or sideways. I know I can buy it for this, fix it for this, sell it for this on terms, get this much of a down payment, all the economics shake out, and you can check every single box. Dude, that to me is real qualified, risk mitigated investing.
I think you said it well. Controlled risk.
Yep.
I love that.
Yep. Dude, I think like that's it, right? It's risk, risk and luck are different sides of the same coin. Both of them,
Right.
right? Like, we think risk is it's risky getting a loan. It's risky getting buying a property. Dude, that can be mitigated, right? Risk is like a 9/11 happens. Risk is a
Right.
COVID-19 happens. Risk is things that you can't mitigate for, right? And just like luck, hey, got lucky that all of a sudden, they brought in uh, an Amazon warehouse, or they brought in some data center, or they, like, out of nowhere, I bought this property 5 years ago without ever knowing that this could happen, but it did happen, and now the value just exploded, and it's amazing, right, what it did for the valuation. Dude, that's luck, and that's real risk. Everything else
Yeah.
in between can be mitigated, and that's what you need to be paying attention to, right? And if you're not mitigating those things, then you're not really investing. You're just kind of rolling the dice and trying to, I don't know, get lucky, which isn't real investing. It's not really qualified of underwriting and doing your due diligence on stuff. So I love what you guys are doing, and I think it's really, really awesome how you're making an impact in a lot of people's lives too, and teaching other people how to do it. If people want to connect with you, Andrew, like where's the best place to find you, follow you, your website? Can you share a little bit about your contact information?
Yeah, you can find me, Andrew Schlag, at Facebook, LinkedIn, Instagram, all the good places, YouTube, and you can find me at truca.com. Thanks for having me, Tim.
Hey, well, thank you for being here. Hopefully you got a ton of great value out of this episode. You know, we try to give as much free value as possible across all of our social media platforms. So the best way that you can support this podcast is by just subscribing to our YouTube channel, by liking the video, by commenting on it, and by sharing it with anyone else who might get some great value out of it. So thank you again for being here. We'll see you next Sunday on the Legacy Podcast.